Hi, my name is Spencer Correnti. I run Alkaline Advisors, and today we are going to be reviewing our fund model template. So, before we get into this, I just want to say this is a templated model. We will customize any fund or portfolio level analysis. This one we made keeping ease of use in mind and a lot of generalities, but we can dump in any reports that any of our clients use, whether it's QuickBooks or Yardi, to track actuals, or if there's certain ways certain groups like to see things. But with that, I will jump into reviewing the model. So we'll start on the dashboard tab. This is what the dashboard tab looks like. For this model, we have 10 assets, and those 10 assets flow individually, so you can track them individually together and consolidate onto a snapshot that we will call our fund roll-up. And this model gives you the functionality to look at the fund roll-up using initial projections, using just actuals, and then using a mix of actuals and reforecasted projections. To start, this is the dashboard. You'll see we have general fund overview information here. We have an asset allocation pie chart here. We're highlighting what type of assets we have in the fund. You can see the fund can host multifamily, commercial assets. We could build it out for hospitality. Again, you name it, we'll build it out. And then we have an equity summary. So when are we committing or how much equity are we committing in the timeline of the fund duration, right? In terms of total equity committed, total equity deployed, and then any, let's say, reserved for future callable equity. We have an equity summary snapshot down below. And then this segment gives us the returns. So here we're calculating the profit, IRR, and equity multiple at a fund level for the GPs and for the LPs. And then you also see for the deployed capital, what does this look like? And this is at a project level. This is just at that fund level, and that fund level is what's being separated out into GP and LP. Then we can break it down into individual property types and individual assets. Here you'll see project 1, project 2, 3, 4, all the way up to project 10. This is where we separate out generalities of the project, name, asset class, the value, total basis, what the outstanding debt is on the asset, and then the net asset value at a given point in time, which we'll get into. We have the NOI that's been annualized, and then the cap rate that we're using to calculate the net asset value. Underneath, we have project level returns. Again, we have project 1, 2, 3, 4, 5, all the way to 10. We're calculating on a project level what the contributions are, then what the distributions are. So contributions are money spent, distributions, money being received. The difference is the profit. Then we have IRR, equity multiple, and the NPV. So underneath, we also just have a fund cash flow as it relates to the contributions and distributions on a fund level. So you'll notice in this model, we have blue tabs and the other tabs are not blue. The blue tabs house the inputs. Within the blue tabs, you'll see blue cells. These are input cells. The way that we've built this model right here out is that we are pasting in these figures from another model that we made. We can paste these figures in from anywhere, whether you have an existing model that you'd like us to use, whether you'd like us to build a model for you that has an output tab, or if you're using some form of software, we can just paste the information in. But essentially, we paste the information in, and then everything will flow accordingly. You'll see, right, these are hard-coded figures. Now, with this model, right now we have 10 assets loaded in, right? Each asset you'll see here is project 9, and then underneath is project 10. What we could do is, say you load all these projects into your fund model and you're presenting them and you do not want to show the impact project 2 will have on the fund. What we can do is we can toggle project 2 to off. By toggling that to off, we'll go back to the dashboard and we'll see now project 2 doesn't come through. And as a result, it is taken out of the fund level returns. So it's just a nifty little functionality tool. You could also see the number of assets have changed now. We have 9 assets. So let's go back, and you can toggle off based off of, let's say an investor wants to only see some property types and not others, or assets in some geographical locations and not others. You could be creative with it. But this is the inputs tab on a project level. Next, we have the fund level inputs. So here is where we're talking about the amount of capital committed when that comes in. We're talking about the capital deployed, the fund level expenses. So first of all, you can add in as many as you'd like, but you can also choose how we are calculating these expenses. Are they fixed? Are they variable? Is it just, a straight input number that will track directly from the project inputs? But if you have variable, you can choose the amount. You can make it based off of deployed equity or committed equity, and you can choose the frequency. Is it monthly? Is it quarterly? Is it annually? Same thing with fixed. You can choose the amount. You can choose, are we using that amount annually, quarterly, or monthly? Right, so now it's that 20,000 per month. Here's 20,000 per quarter, and here's 20,000 annually. So you'll see it just comes in once a year. So we can customize all this. We have expenses, which we can override at a fund level. Otherwise, it'll be calculated with these inputs up here. Next, we have the NAV calc. So on this tab, we can choose what date we want to run the analysis from. And then we'll plug in the purchase price of the asset, and we'll calculate everything automatically based off of the other inputs that we had from that project input section. Next, we'll go to the partnership level returns. Here we have a GP-LP waterfall structure. So we can apply this at a fund level. This is what's being applied at a fund level. You could also theoretically apply it at an individual deal level, though what we've done at an individual deal level, which are these P1 through P10, which is down here, what we've done at the individual deal level is given this client the opportunity to actually calculate what GP and LP returns they've actually paid to their investors from an actual perspective, right? So they're manually plugging these in. I'll get to these blue tabs versus these green tabs in a moment, but we'll go back to the partnership level returns. We can choose what percent of the equity the GP is bringing in at a fund level, what percent the LP is, and then ultimately we can also choose the distribution hurdles. How many hurdles? Is it 0 hurdles, 1 hurdle, 2 hurdles, what the pref rate is, what the promote is? How are we calculating the promote? So is it a true promote or is it just a split? So if you do an 11% split, the distributions will just be split 11 and 89 versus if we do a promote, then you actually have an 11% promote on the amount of equity that you have available. Next, we have the compounding frequency. Right, we can choose, is it monthly, annually, no compounding? What do distributions look like that we're making to our LPs? Is it paid out annually, quarterly, monthly? And then when is the equity contributed? So are we saying we're contributing all the equity for the fund up front, or are we contributing it when it's incurred? And that is just based off of at a project level when we need it. Obviously, that's going to have bearing on the IRR, but to be safe, we'll just say we'll collect it up front so that you don't have to continuously make capital calls. So then you'll see these red tabs are fund level roll-ups. This is what it looks like on an annual level, on a quarterly level, and then, fund level this is a monthly level, then we have on a quarterly level, and then we have on an annual level. Now, this fund snapshot on a monthly level could be tied to a mix of the information on the project inputs, the information on these actual tabs, or a mix of both. And you'll see that's in this tab right here. We can choose if we want to take a snapshot of the initial projections as they're running through the model, and that's what this would look like. We can choose if we want to just showcase what the actuals look like to date running through the model. And that is what is picked up in these actual tabs, which we will hard code in here. You see this is project 1, this is project 2, this is project 3, project 4. Let's go back to fund level, or we can choose reforecast. And with the reforecast, what we're doing here is we're taking the actuals as they've happened, and then we're essentially going back to the project inputs and dumping in completely new data, however many months after the initial data was dumped in. So let's say we ran the analysis in 12 months ago. We dumped this in. Now we're 3 months into the analysis. We have 3 months of actuals that we've been tracking. And with those actuals, we'll repopulate our initial forecast deal level model, paste everything in. That'll produce a new output tab for us with new figures over here. We'll paste these new figures in. And with these new figures, they will be flowing through the model. So we'll catch the actuals and the newly pasted in figures right here. So the initial figures that we pasted, so these figures, so to speak, they won't be in the model anymore. And then we can also build it out where we have the initial figures in, we have the actuals, and then we have reforecasted based off of not new figures, but based off of the actuals as incurred. But that could be a different model, it could be the same model, it's just additional customization. So again, all of this will roll back up to and the fund level inputs. As I said, we could do the reforecast, actuals, or projections. We're tracking the actuals as they happen here. And with these actuals, these are flowing into the deal level on an individual level. And then they're flowing back into, all of them are flowing together into the fund level. So with that, that's a brief overview of this general fund level model that we put together. It is a template. It's very simple. It's pretty powerful, but it's very easy to use and very easy to present and very easy to understand, and gives one a very solid background as to where they stand with projections and actuals as it relates to their entire portfolio. So if you have any questions, please reach out. Happy to answer questions on this model or discuss other nuances or functionality that you might want in future models. But with that, again, my name is Spencer Correnti. I run Alkaline Advisors, and this is our fund templated portfolio model.